Hey, what's up everyone? Welcome back to another video. We are going to be doing a lesson on advanced smart money concepts for this one. So this video ties in directly to the optimal trade entry series we have been uploading here on YouTube. And I really want to highlight a few key points that I look for to find FOMC setups. Now, I know you guys have probably heard, especially if you guys are beginners, that you might have heard Michael say this: stay away from FOMC, wait for 15-30 minutes after, or whatever, he says. And I get that, it applies to beginners. So when you're a beginner and you don't know what you're looking for, FOMC, non-farm payroll, any type of high impact news can typically have you completely wondering if you even know what you're doing. So the chart might not even make any sense to you. So this chart, if you guys see it, it might not even make sense to how we traded this, but I called this move live for you guys so you guys could hop in. We were able to trade this for FOMC, and I gave you guys the setup in the Telegram group for those of you that are in it. It was a very nice trade, very specific levels here that I was looking for. So I have my annotations off. I'll go ahead and turn them on here in just a second. We'll jump right into the video, and I'll pull up that Telegram screenshot. So annotations are on. This is the FOMC news release. That's I think it was here. Yep, right there. At 2 p.m. Wednesday, November 23rd. So right off the bat, we are looking for higher prices on foreign currency and indices or index futures, lower prices on the dollar index. This is a very key level here. We have here this level here at 34,280. It's a daily high that I was aiming for. The reason I was aiming for this high is just because this is pretty much a low-hanging fruit entry. That's typically what we focus on for these models. For this model specifically, just the optimal trade entry model in general that I have been showing you guys. Very nice, very accurate, very consistent for low-hanging fruit targets. So if you're targeting low-hanging fruit areas of liquidity, this model is so easy to learn. Obviously it takes time, but I believe pretty much anybody can learn to recognize these patterns in real time. Also, you gotta recognize the bias and narrative, but it's a very specific pattern. So we'll go ahead and jump right into this. Note this level here. This is an H1 bullish order block. Now you guys got to really pay attention to this because we're going to go pretty fast here. I don't want to make this video too long. These last two down close candles are our bullish order block. The reason I targeted this level here is because we are at a OTE here at a discount. So if we anchor a fib from this candle's low where this bullish order block starts, this low here, these last two down close candles before this big move up, and we anchor up to this fib, to this high, anchor the fib to this high here, extend that out. You can see we had quite a bit of a retracement here, 79% retracement, almost 79% retracement, but as you can see, we had perfect order block delivery. Didn't even have to dig into the body, which is why I had my limit order placed a little bit higher up into the wick. So we had a very nice fill on that. And the reason I targeted this level is because of this the price. Look at the price here. Look at these prices here. We have 33,997, and I want you guys to know this institutional level here, 34,000. So actually put that here. 34,000. That's a smart money key level. Look at the low on this candle here, 34,001 with 50 cents. 34,001, 50 cents. So very, very specific. There's a reason I targeted this level. We are at a discount. We are expecting higher prices. So this is not a break in market structure. Once we got this high, low, higher high, and we had the displacement lower, this is not a market structure. This is a very specific manipulation for FOMC. Now, note, after the 10 a.m. After the 9 a.m. candle, we close and then we start selling off. Start aggressively selling off. Now, this is done purposely. The reason this is done is because they want to induce sellers. So, typical support and resistance theory. You want to sell at resistance and buy at support. So if we note this, we'll go we'll zoom out to the daily real quick. Look at the high here and look at the price reversal here. So we're so close to that high. Here's this candle here. We're just so close to that high that the logic of retail would be to sell here with our stop loss above the swing high and expect lower prices. You know, target maybe this support area here where you see all these wicks here. And I say that quote unquote support. So we have these wicks here. We'll go ahead and zoom back into the 1 hour chart. So the logic behind this is when retail sees this, they're gonna want to be selling this. They're going to want to be selling here like on a retest. Maybe when price breaks here, maybe they'll be looking at this level here. We'll take this fib up. You guys know we're at a discount. Maybe retail would be looking at something like this. You got all these wicks here. As soon as we broke below that, retail is gonna wanna be selling this here. So as soon as we retest this quote unquote broken support, turn resistance, they're gonna want to be selling in this area. And that's a very, very specific manipulation for FOMC. So if you guys look at the logic behind the move, you'll quickly be able to do this yourself. Well, I don't mean quickly, but you guys will be able to do it if you put your mind to this, and you show up every day. You guys, for those of you that are in the Telegram group, you guys see me there. I show up every single day. You got to treat this like a business, like a job. You can't just expect to make this a hobby and make money from it. You have to show up every single day for either one session or both sessions, whatever you guys feel comfortable with, London or New York. But if you guys show up every single day and are constantly charting, learning, and developing a model, obviously this gets neglected a lot too, but collecting stats, collecting statistics, you really want to know what your strong areas are, what your weak points are, and you want to work with those. You want to exploit your strong areas, and you want to work on your weaknesses. So you want to really push your strong area. This is where I excel. I excel in these types of setups. I'm very good at spotting OTE setups with the narrative. Obviously, it's not just a price pattern. There's a little bit more to it. So this was our confirmation to it. 34,000. We missed it by just a point and a half. We got a strong reaction. And then I'll zoom out a little bit here. Zoom in to the 15-minute chart so you guys can see this. The perfect H1 bullish order block delivery. Now you might be thinking, okay, well you probably don't see anything here on the 15-minute chart. Like you don't see anything. Where's the imbalance here, right? There's no imbalance here. There's nothing here. So all price did was come back down into this imbalance here one more time and then take off. I'll show you guys real quick. Look at that imbalance from this candle's high to up to this candle's low here. Extend that out. Look at that imbalance. Perfect price delivery. Why this imbalance? Well, it lines up with the H1 bullish order block. This is why you have to look at your other time frames, like all your time frames for confirmations. So you might not think anything here stands out, but if you zoom out to the H1, This to me is very, very, very specific here. So this is a very key level. There's a reason that smart money left this here. This is a very key reference point the algorithm is going to reference, so they can load up here. And as we can see, they efficiently loaded up here. One pass down into this imbalance here. This is the 15-minute fair value gap into the bullish order block, the H1 bullish order block, and we took off. We did not look back. So it's very specific. Now we didn't actually get the news release. We traded into this a little bit earlier, which was 12:45. So a little bit earlier. FOMC is around 2 p.m. So we started rallying higher. So as soon as we broke above this swing high here, we had a break in market structure. So here, news release is here. This candle's open. We traded into this, we retraced into this and just took off. The reason for that is this imbalance here. This candle's low and this candle's high. We extend that out. Very nice fair value gap. These last two up close candles are our bullish breaker. Note the candles. Note this wick here. I was respecting these candle bodies. Now you wouldn't want to draw these lines here, horizontal lines up to the wick. You really want to use the bodies. That's where the most volume will be. So you really want to concentrate on the candle bodies. So as we have here, fair value gap coupled with what's our entry pattern? Bullish breaker. Price retraces into this at the news release. This is 2 a.m. I'm sorry, 2 p.m. Retraces into this fair value gap, takes off, runs the daily high here. This swing high here. This is our high for the day. So the same New York high that we put in here at 9:45 p.m. 9:45 a.m. So this is the high. We ran that, and then we retrace back into this fair value gap where we kind of consolidate here a little bit, and then we didn't actually run that high until the next day's London session here, when we retrace back into this imbalance here. So once we ran out that high, we kind of tapered off. So really look at the logic on this trade setup. Everything was engineered very specifically, very methodically, from the sell side liquidity to the buy side liquidity. So look at how the Asian session was consolidating. New York open, true day New York open here. Then we ran up the sell side for the Asia low, ran that out once more, traded higher. Then we came into a discount. So price ran into this bullish order block here. We traded much higher into the equities open at 9:30 a.m. EST. And then we traded into this imbalance coupled with this volume imbalance here and this fair value gap. We kind of consolidated a little bit here. We didn't actually get the run on there. So what price did here is completely rejected this move. So this is gonna entice sellers. The reason for that is because, like I said, we're so close to this daily high. This is the daily high here. So retail is gonna think that we're gonna make a lower high and we're gonna sell off just because this level was the high for August 16th. Note how they sell off aggressively here, but we don't think that way. The reason we don't think that way is because we don't trade retail concepts. ICT concepts focus on very logical things. So if you look for logical characteristics in price, you would know that this H1 bullish order block here was engineered and left there for a specific reason. So there's no coincidence here. 34,000 institutional zone, big figure, very key level. Price trades down in. We trade back into this M15 imbalance here. No, this imbalance. We don't see any other imbalance here. This is our only area of imbalance. Price trades into that. Then we aggressively trade higher, and then we retrace into the news. Now this wasn't actually the actual FOMC. This was the I believe just like a FOMC report. It's not the actual FOMC event, which is why we didn't see any crazy volatility. It was a very nice move, sharp move, but it wasn't the actual FOMC conference, which is like a report of, to my understanding, it's like a report of what happened in the previous conference. So as we trade higher, we retrace. It respects the bullish order block on the M15, coupled with this fair value gap, and then we just take off. So hope you guys enjoy this one. If you haven't already, go ahead and like and subscribe. I'll see you guys in the next one.